Are you tired of spending countless hours analyzing charts, trying to predict market movements, and still struggling to turn a profit? Well, I've got great news for you. In today's video, I'll introduce you to the best free indicator on TradingView that can help you start making money. We'll go over how this indicator works, how to set it up, and most importantly, how to use it to make smarter trades. So stick with me, and let's embark on this exciting journey to become better traders. First things first, open up TradingView. Once you're there, you'll see a search bar at the top. Use it to find the chart of the asset you're interested in, whether that's Forex, crypto, or stocks. This strategy works across all markets, so pick one you want to analyze. Let's talk about the indicator we'll be using today, the pullback trading tool. This indicator is perfect for identifying potential pullback opportunities, which are great entry points for traders. If you're unfamiliar, a pullback is a temporary reversal in market direction, and this tool helps you spot those moments when the market is gearing up for its next move. Here's how to add it to your chart. At the TradingView interface's top, click the Indicators button. A search bar will appear, type in pullback trading tool, and when you see it in the list, click to add it to your chart. Once it's on your chart, you'll notice some new lines and signals specifically designed to help you spot pullbacks. Head over to the settings for the indicator and adjust a few things. In the input section, make sure all moving averages are set to close and disable the show moving average ribbon option. Next, tweak the settings for the fast, medium, and slow anchored moving average to match your strategy. Set the fast moving average to a length of 45, the medium to 90, and the slow to 200. Also, adjust the signal anchor to a length of 63 and enable the color bars to make things easier to track. So what do these lines mean? The indicator displays four main lines: the fast, medium, slow, and signal moving averages. These lines smooth out price data and help identify the market trend. When the price is above all the moving averages, the asset is in an uptrend, a signal that it's a good time to consider buying. Conversely, when the price is below all the moving averages, the market is in a downtrend, suggesting it's time to sell or avoid buying. Here's how we use this tool in a real scenario. Let's say the price is in an uptrend and it pulls back to the anchored moving average ribbon. This is the moment we're waiting for. Next, we identify the last swing high, which is the highest point the price reached before the pullback. If the price breaks above that swing high, it's our signal to buy. After entering the trade, set a stop loss just below the most recent swing low to manage your risk. For take profit, use a ratio of 1.5 times the stop loss level to ensure your potential profit outweighs the risk. Let's flip it for a downtrend. If the price is below all the anchored moving averages, wait for it to pull back up to the ribbon. Once there, identify the last swing low, which is the lowest point before the price retraced. If the price breaks below the swing low, that's your sell signal. Enter a short trade and set your stop loss just above the recent swing high to manage your risk. Again, aim for a profit that's 1.5 times greater than your stop loss level. Now let's go over some examples to bring this strategy to life. For instance, let's look at the euro against the US dollar on a 5-minute chart. Here we can see the market is in a downtrend because the price is below all the moving averages. After the price pulls back to the anchored ribbon, we can draw a horizontal line from the last swing low and wait for the price to break below it. That's our entry for a sell trade. As we continue observing, we notice a few more pullbacks, but the price doesn't break the recent swing low, so no trade is taken. Eventually, the price breaks through the moving averages, signaling the start of an uptrend, and we adjust our strategy accordingly.
To take your trading to the next level. If you're tired of trading with limitations and want to unlock your full potential, listen up, this could be a game changer for you. Imagine trading with up to $300,000 at your disposal and keeping up to 95% of the profits. That's exactly what Funded Next offers. And the best part? You're in control. No trading deadlines, just pure opportunity. Plus, with raw spreads and the lowest commissions, every trade is set up for success. Worried about payouts? Funded Next guarantees you'll get paid within 24 hours, or they'll top it off with an extra $1,000. Don't miss out. Join over 81,000 traders worldwide who are already making their mark. Click the link above or in the description to sign up, get funded, and start trading like a pro today.
Now you're in for a treat, traders. Here are the juicy details. We tested it on the Ethereum 15-minute time frame with a risk-reward ratio of 1.5 to 1. We scored a whopping 84% win rate from 100 trades. This is just too good to be true. And that wraps up today's strategy breakdown. Before you go, make sure to check out our next video if you want to turn this into a fully automated bot with alerts, or the other one where we cover some critical trading tips you don't want to miss. Let's take your trading skills to the next level. Happy trading.